Good morning. This is Jerry Gulke, market analyst for Top Producer, and with a report on today's USDA's all-important October crop report. This can often be a make-or-break situation for grains, as this is a time that the USDA can change previous acres in particular, and also revise the yield. And they did it again today. Two things are important. They did not raise the yield as much as maybe perhaps Informa would like to see, or even Lynn Group, who also had higher numbers, but they did raise it about 3 bushels an acre, 2.3, I guess, to be exact, and a new record in corn. They did not see the same thing in beans, and all these numbers you can look at on the web. However, a couple of important items in their supply and demand outlook. They continue to raise the feed usage, another 50 million, and apparently in suggesting that they don't see the liquidation in cattle and in hogs that some expect it has to happen, and maybe we're not going to see that until further down the road. But so one gets in the trenches and talks to people that are in that business, I think a liquidation may be more than what they are thinking. But so a 50 million bushel reduction in or increase in feed usage may be unwarranted. Interesting also that there's a reduction in the exports, and of course they were had raised them pretty highly in the past, and now reduced them, probably on an outlook for the world economy not being quite as robust as they thought. We're off to a pretty poor start in this year's exports of corn, and we've got to really ramp this up so that we can even suspect that it's going to be much better than last year, let alone considerably better that they've got printed in here. Bottom line in the whole thing is that given all that, there's room to move the usage up and down a little bit. And if you look at the bottom line in corn, after this huge crop that we have and a poor world economic situation, domestically livestock feeding terrible, you're only going to increase ending stocks this year about 37 million bushels, or hardly a drop in the bucket. I don't think we can guess that close on the crop. So all that we produce this year, we're going to use this year. So that begs the question as to what happens next year. And of course, ethanol should probably rise as well. Maybe even this year another 100 million bushels, depending on crude oil, of course. But ethanol has become very, very profitable recently, much more so than in the last couple of years. Obviously, with corn prices lower. So I would think, looking ahead into next year's crop, we're going to need every bit as big a crop as we had this year. And likely corn turned around to watch for 6 to 10 day outlooks to see if we get any kind of harvest pressure at all. I think there's a lot of farmers that have been selling in a big crop and now suddenly find themselves underwater, being up 70 cents or so off those lows. So personally in the corn, we got into mostly puts. We bought some puts, cost us some money, some 240s. Yesterday we rolled them up to the 340s. We rolled them up to the 360s. Trying to get at least 60 to 70% protection at $3.60, barring a what if this market crop would be very, very bearish, which in essence we didn't get. Now, big crops get bigger, and we'll see what happens down the road. One other thing is that SMS, Strategic Marketing Services, now called Gulke Group, by the way, has been talking about the fact that USDA has been high on their acres. And today they did agree. We were thinking there were 750,000 to 1 million acres too high. They lowered it 750,000 in corn, lowered it 300,000 in beans. Insignificant in beans per se, but every little bit helps on the downside. And them not putting up big yields in beans kept that market snug. So we've got the government agreeing that a lot of this crop did not get planted like they first thought, and so they lost 1 million acres. And of course. That reducing those maybe 0 acres didn't increase the yield nearly as much as some thought they should. So in corn, if you do anything at all, I want to have puts in here. If this market is is called lower, if it drops out of sight or drops hard, then you have to start taking a look at your yield and an individual basis, your yield times the price, and how that compares favorably or unfavorably with your crop production revenue insurance. I think this volatility has to be handled with puts. Take a good look at your basis. Basis is narrowed in northern Illinois, where I'm at, to the lowest level, the narrowest that I've seen in years, all the way from minus 55 to 60 in some cases last year at this time for this crop, down to 30 under now. So if you're inclined to question whether you ought to be in the futures market, consider how much you give away by a wide basis. Up front here now, they're 30 under. For July, they're 45 under. So the market is, and buyers are building in a lot of cushion in here for volatility and margin calls. And if you examine it, you're paying a high price to take a wide basis when you could be hedging it off and making 35 or 40 cents a bushel in basis, not to mention the carry in the market in some cases. Soybeans should see the front months get stronger with respect to the May, and then respect probably for next November out there. The wheat problem that we have is that they raised the wheat carryover again, and another 103 million bushels. Some think they're even 50 to 60 million below reality in that one. They lowered exports, lowered feed usage. The only thing that's going to help soft red of wheat at least and wheat in general worldwide is to plant less acres of it. And right now, the price that they're offering doesn't give us any incentive to plant winter wheat. And in fact, in a lot of cases, and even in the South with a double crop, full season beans and corn do better than wheat double cropped with beans, which wasn't the case the last 2 years. So expect to see 1 to 2 to 3 to 4 million acres less wheat overall in the United States, maybe less wheat in the world, and that's going to solve that problem. You've got to get a crop problem in some major reporting country to get rid of about 300 or 400 million bushels of wheat to get these prices going back up. But again, we're at $4.50 a bushel. I find it hard to believe that that's the kind of that we if you haven't sold it, that you want to sell it here. The new scheme that the CFTC has about storage on the wheat makes it very profitable to store that wheat, hedge it off again for another 3 to 6 months, and you can make enough money in 1 year storing soft red winter wheat at least to pay for a grain bin. So you'll see the market really, I don't think they did a thing to help the cash market convergence that they're talking about. So basically, the crop report is called bearish all the way around, I guess, maybe because we're looking out 10 days seeing some harvest weather. But, and again, at so many of these reports, how we close this market will speak volumes today. We've rallied 70 cents off the lows. That's in corn. That's why we have options. Beans seem to be priced high enough, unless the dollar continues to collapse, to get maybe not many acres increase, but certainly fertilizer use back in South America. We could see 20 to 30 million metric tons increase in beans down there. That means that beans somewhere between now and next fall go to $8 or less, depending on our cropping intentions next spring, of course. $10 beans seem to be overpriced at this level. Wheat has already gone from $8 to $9 down to $4.50. We lost half that crop. So looking forward, I think the market's got to be concerned that we won't plant that stuff. The other key is, of course, the livestock industry. They're in trouble. This should help. This should say that we've got sufficient stocks pretty much in everything to keep a cap on prices. Doesn't mean that the funds that are now going after gold and thinking we're going to have inflation back aren't going to come after grains because they want to own some of it. But when they're all done going to the trough to do that, then we got to take a look at our gross income, our net income out here, and possibly be a little cautious about selling 2010 crop. Although our again, and your individual cash flows with the kind of crop input drops that we've had, my fertilizer dropped from $750 a ton for anhydrous to $400 this fall. That changes my profitability considerably, and so does the P&K and fertilizer, and using that to rebuild things we didn't use last year. So the profitability, even though corn prices are down, $4 corn, cash corn for July of 2010, looks probably just as good as $5 did a couple of years ago. So we shouldn't have a problem planting as many acres in corn next year, but going forward, as of today, it looks like we have eliminated that bump that we had 2 years ago in the extreme rally in grains, got back down again, solved that problem. We're back to where we want to look at 2006 levels and say, are we worldwide now back on that trend of using 1 to 2 to 3% more food worldwide, and can we keep up with that? And it's almost like the last 2 years were a bad dream. Good fall and a safe harvest, and we'll look forward to the November crop report